Hi, this is Yahoo. I'm a macro option trader. Today is August 21, 2025, 10:26 a.m. Japan time. Let's do a quick market review. I'll go over last night's moves and the current Japanese market. First, Japan market. So yesterday the Nikkei closed at 42889 yen and right now it's at 42661. So we are seeing a bit more decline here. Yesterday's move was 1.5% down, a clear drop. Momentum is not collapsing, but it feels like we are in a correction phase. After such a strong rally, this looks more like a time adjustment, sideways movement at high levels. Now, the PER was 17.77 and EPS is down to 2413 yen. EPS momentum looks weak, and that's something I'm keeping an eye on. As for rates, Japanese 30-year yield climbed to 3.16%. That move is tied to speculation about the consumption tax cut. The market seems to think physical spending will expand, and that's pushing it up. For equities, though, and that's not entirely bad. With money supply likely to increase, equities could still see inflows while bond demand falls a bit. So yes, Japanese equities are still strong. This pullback looks like just a short-term adjustment. Second, US market. Now looks at the US and the VIX briefly spiked to 17.7, but it closed at 15.69, basically unchanged. The S&P ended at 6396, down 0.24%. So compared to the US and Japan still looks stronger. US bond 30-year yield is 4.9%, moving index around 18. No big change. Gold was 3315 2 days ago, but yesterday it bounced back 3348 dollar, about 1% up. Still, I think money is flowing out of the gold, and this looks like just a rebound within a correction. Bitcoin is around 114,000 dollar. Same story. After strong run, is in a correction phase. Monetary policy, one key point, and FED, more members are getting cautious about rate cuts. With Trump tariff in play, they want to think carefully before moving. If the US is that cautious, and the BOJ might also prefer to stay on hold, cutting rates could be risky right now. Eventually, yes, we are head toward the deflation, and rate cut will come, but they may want to keep that card in hand until the very last moment. Sad and real estate and corporate risks. There was also news about mortgage fraud in the US. Basically, people taking out low rate home loans and then flipping them into high yield investment properties. And this happened in Japan too, especially during the Abe era when real estate price keep rising. It pushed price up further and locked real buyers out of the market. The IMF actually warned about housing bubble in its April report this year. So yes, the US might be facing something similar. Also, corporate fraud is something to watch. In Japan too, we see investigation committees, restatements, and delights. These things always surface when the economy overheats. Pose and climate risk, but honestly, I think climate risk is the biggest threat. Tokyo is boiling hot right now. We had a scare about water shortage, and then some rains came and people relaxed. But if you look at the rainfall on average basis, it's way below normal. It's like the money supply markets shrinking, but everyone feels safe for no reason. Natural risk like this um huge, and we need to keep watching them. Okay, wrap up some overall. Japanese equities are still strong, just in time correction. US market are weaker in comparison. Risks are everywhere. Housing bubble, corporate fraud, and above all climate. That's all for today market review. If you like to going long put on my contents, please follow me. See you tomorrow.